This is the current stock market update for NIO Incorporated, stock ticker NIO. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comment section so that other traders can find this information more easily on the platform. At time of recording, NIO is currently trading around $6 per share with gains of about 8% on the day. The market is currently front-running a high conviction March delivery report. So this would be the main sort of news or the major catalyst that we're seeing for this price movement today. Now, I would note that several meme stocks are rallying pretty hard right now. BBAI, for example, is up by about 15%, which is fairly significant. And in this video, what we're going to be doing is looking at both sides of the NIO argument. Is this really a major structural breakout? Or are we looking at an accounting mirage that is going to ultimately send share prices lower? When the price action is aggressive, the fundamental backdrop is a tug of war between peak investment and brutal sector-wide slowdown. So there are a couple of different ways of looking at these things, and this is the most objective viewpoint that you're going to see on this entire platform. The reason for that is because I don't actually have a position in this stock. I'm not long or short, which is in contrast to most of what you see on this platform. Most of these people that are doing NIO videos have some sort of long position, so obviously they want the stock to move higher, and they're not interested in focusing on a more balanced outlook that might take some of the negatives into consideration. So here's the current breakdown for the Chinese EV group. Number one, the profitability debate, the milestone. NIO recently reported its first ever GAAP profit of about $40 million in the Q4 period of 2025. This has temporarily silenced the bearish aspect of the community. I wouldn't say that that's completely true. There are several people that do still have a bearish outlook. For example, the Barclays skepticism. Analyst Zhang Xiao, this is a Chinese analyst, has an underweight outlook and a profit target of $4 per share. He argues that this quarterly profit move was a one-time win, quote-unquote one-time win, which was manufactured by a 44% drop in research and development costs. The bearish thesis here is that you cannot win a tech-driven price war by slashing your innovation budget, and this is clearly the case. And as we're going to look at here, there are several other companies in this Chinese EV space that are having a lot of difficulties right now, and there is a major battle in China itself. The counter argument, so this would be the bullish side of the argument. Bulls suggest that NIO has reached peak research and development with the NT 3.0 platform and Shenji chips already developed, allowing them to finally harvest operating leverage. So the argument here would be that they don't need any more research and development because they've already developed the Shenji chips and the NT 3.0 platform. However, there are broader issues here that people need to be watching, and there are some clear signs with Li Auto that should be taking people taking some of the focus from the people that are bullish on this NIO stock. Number two, the Li Auto warning signal, market context. Li Auto, the traditional efficiency leader. So this was traditionally the company that was the leader in terms of profitability. Li Auto just saw their profits collapse by 99.4% on an annualized basis. Okay, so that is not a typo. 99.4% crash in net income. The read-through, if the market leader is struggling to stay in the black, so to stay profitable, the sustainability rally narrative for NIO faces a very high hurdle. In other words, a very significant obstacle. The Chinese EV market has shifted from a growth phase into survival mode. Okay, so it's not as the growth phase is not as dramatic as some people that are bullish on NIO stock might think, because incumbents like Li Auto are being squeezed by tech giants like Xiaomi and Huawei. Notice I did pronounce those two brand names correctly. Do you know why that is? It's because I lived in China for 3 years. I know more about this country than pretty much everybody else on this platform. I know an extensive amount about this market, and most of the other people that are discussing NIO stock are simply faking it. Number three, infrastructure as a financial asset. The pivot. NIO is currently moving battery swap costs off balance sheet. By using asset-backed securities, ABS, through Marathon, they are funding their 1,000 station expansion with outside capital. The moat, reaching 100 million cumulative swaps, validates the BaaS model, creating a structural barrier to entry that competitors cannot easily replicate without massive capex. Okay, so these are positive aspects, but what we do have to understand is that the broader market in the Chinese EV space is not as strong as people might think it is. So in other words, it has become easier for NIO to make progress in these areas. Number 4, near-term catalysts to watch. March deliveries, April 1st. The market currently expects to see between 32K and 35K units. Anything less than the high end likely erases today's gains. Okay, so this is important here because a lot of people seem to think that, maybe just an improvement or an increase in deliveries will automatically mean that share prices move higher. That is not how the market works. There's a phrase in the market called buy the rumor and sell the news. If we do not currently see, a surprise in the expectations, all of today's gains are likely to completely reverse. So I understand that people are very excited about today's activity, but today I'm calling today meme stock day because, several meme stocks are rallying higher. As I said, Big Bear AI is up by about 15% right now. Also, the ES9 flagship launch on April 9th. This is the ultimate litmus test for 2026, so a bit of a longer term view here. If this premium SUV fails to capture the high-end margin segment, NIO's path to full 2026 non-GAAP profitability becomes highly improbable. So the Chinese analyst that we were talking about earlier from Barclays, a lot of what he's saying does rest on this idea. And, a one-quarter movement into profitability is not as substantial as a lot of people think it is. You need to see things like full year profitability and things like that. And, currently NIO is very far from that type of success or achievement, and it is still highly debatable to see whether or not this will actually happen. So in summary, NIO is currently benefiting from a perfect storm of delivery optimism and de-risked infrastructure spending. However, with the broader Chinese market showing severe margin compression, as is seen with Li Auto, the question remains, is this the start of a new era, or is this a liquidity window for investors to exit before the $4 bear case reasserts itself? If we look into the actual chart history here also, as we can see, I'm sure today people are getting very excited. This person is a major pump and dump YouTube scammer who just wants people to think that share prices will always move higher. But if we really zoom into the price chart here, what we can see is that today's movement is much smaller than it might feel psychologically. As we can see here, this rally has not even broken above the prior resistance area that is seen near $6.20 or $6.30. So it is an upside price movement, and it has now established a support zone near $5.30, which is another area that we've been watching previously. But today's price movements are still relatively small, and if we do not see some upside surprises in those delivery numbers, it would be very easy to see a failure right into that resistance zone once again. So, it's very easy for people to get excited with these things, but you do have to take a balanced approach. I do recommend that people stay away from meme stocks in general. There is no reason to be trading anything that trends on social media because there are much better stocks in the market. And it is always more profitable to buy stocks that are trading under the radar. In other words, things that are not trending on social media and things that are not being pumped by people with stupid facial expressions like this fucking imbecile over here.